All right, we're live. All right, what's going on? All right, Cameron, this is specifically for you. You were on the stream today, and I want to kind of go through what your play was. INTC. I'm gonna go through all the stuff. The play itself is in the description below. You should be able to see it pretty easily. And I'm gonna go through it real quick. I'm gonna see what this thing is at. So first of all, this kid's smart. This guy's smart. He got time on it. That's number one. So let's just take a look at what the position is and where it's at right now. So he said he got it for 62. So I didn't get a chance to actually ever determine whether or not. So the good news is the theta on it's really small, so your decay is not an issue. That's number one. However, you did say that on Friday the position was worth 2.9 per contract, which means you had bought a position for $62 and you had then been able to close that position at $290. And that is a very, very good. That's a very good change, honestly. And I think had it been me, I very likely would have gotten out because I did the same thing. I got about 314% out of it, and then I think you as well have gotten quite a bit out of that position as well. What was it? But you got more actually. You got 3 times more than I did because I think you got almost. I want to say okay, so you got 500% out of it roughly, and that's a really good place to be at 2.9 for 62. Now, because you have so much time on it, technically, if you land back in the money, you have a lot higher chance of it being worth something. For example, once we actually close in the money, you can see that Intel actually does not hold the same value, but if it can be deep in the money, then you have the potential to be very well off. If you even take it halfway and you make it deep in the money, you can do it. But now that requires a very deep in the money exchange, and that at that point you need to decide what you're going to do. Now, on Friday, what would have been the best move? Firstly, and this is what I keep saying, but it's hard to think about and in forethought, but the idea is you want to buy something. If you're playing in earnings, just buy 2 of them. Because don't get something too cheap, because if it falls too far out of the money, you're not going to make anything. But if you can stay in the money or within that range and buy more than one, then buy more than one. And also don't listen to me because I'm not a financial advisor. Please see an actual financial advisor. I'm going to have to memorize my thing. But in the meantime, do not fully listen to me, but just understand that would have allowed you the ability to sell one of those positions and keep the other for free. Because you had made more than 100% on the position. And if you make more than 100%, then anything that you earn becomes free, as long as you sell the other bit of it. So that is what would have been something that could have been something smart to do. Now your thinking, I remember you saying, is that with AMD's earning coming up, you anticipate that, if AMD does poorly during their earnings, because that earnings is tomorrow morning, you're assuming, and unfortunately it's too late for me to actually make a decision, for you to make a decision about this, because you're in it. You're either in it or you're not. So it really just depends. Now, what matters is, let's take a look at an actual earnings where their earnings affected them, because AMD is not huge about this. I've noticed that they don't exactly react the same way. They kind of continue on whatever trend they were on. But let's try this one. All right, actually, let's try this one. They expected 6. They received... the estimated was 7. They got 6, which means they lost, which means they gapped up, and then they came down. Whatever that day was. So this was 5-1. So let me go to May 5th of that same exact year. Okay. So one of the concerns here is that I never have believed this, that these unfortunately don't inverse each other. So just because AMD comes down, and does not mean necessarily that Intel will come up, because while they are competitors, that does not necessarily mean, the worst for them. So AMD had come down kind of hard on that day, and that is an appropriate reaction to, obviously, Intel's coming up very hard on that day. And that is understandable, of course. However, in the long term, and this is obviously a longer position, you're in it for about 3 months, whether or not it's smart to think that because AMD will move very strongly in one particular direction does not necessarily mean that Intel will not move in in a direction like that, right? So if I bring them up together, which, you know what I'll do, I'm going to go ahead and detach this. I'll show you what I mean. Okay. I detach it so I can actually properly just view what it is that I'm trying to look at, trying to show. Come down. Okay, there you go. So let's say we put on the 1 year, 1 day, 1 year, 1 day, and we unlink these. So we're gonna keep that on Intel. We'll turn this into AMD. Now, take a look from. Okay, let's figure out what day this is. So this is October 8th to what day? January 24th. Let's find out October 8th here. October 8th to January 24th for Intel has a very similar track basis as does AMD. So from here, we received about a 37% increase up till January 24th. And then from this same date of October 8th to the all-time highs, we received about an 89% increase. Now, these are actually kind of indicative of how the year is going. The entire year has been fairly much like this. However, it is important to note that they did not inverse each other whatsoever. So one company's failure does not actually mean the demise of another company. And that is really important to know. So, as a result, I would not bank on AMD's failure as being something that brings it down. Than that, I think what I pay attention to. Let's look at the 8th here. Yeah, you can see it if I close it off, pinch it off to specifically that scene. I'm just trying to find the tracking day. Right there. Okay. So now, while these two aren't exactly indicative of a similar direction, or no, they're indicative of the similar direction, but they're not trailing each other. But this big drop here and this big drop here are in tandem. They are reacting to the same thing. So it is important to note that whatever happens to your Intel position, it's very possible that it is because of how SPY moves today. I remember I told you earlier today that depending on how SPY moves today and how it reacts to SPY, that is how you should consider your position. Now, for example, here we go. So this morning, while Intel did open up, SPY did come down. This is at 707. This is at 642. So for here, 707, we started coming down as well. Now, they are not, while they do look like they're copying each other, it is important to notice that, like, from here, so this is 633 and this is to 642. From here, 633 to 642, we were coming up. So what does that mean? That means Intel was diverging from the general stock market's trend. And as a result of that, we actually saw that the downside on this, I mean, look at SPY, right? So we came down, came up, came down, came up, came down, came up, came down. That was fine. But we caught every single downtrend. So 728 to 754. 728 to 754. We caught all the downtrends. We did catch this uptrend, sure. But SPY is up for the day. Kind of. Actually, we're kind of closing up here. But let's say before then, and the part that I want you to consider when you were actually thinking about this position was where we were moving in the general direction. And so we came here and we closed, here. So we're up, or we're more up, but this one is down. Intel is down. And so as a result of that, the way you have to think about it is that there were divergences and where those divergences were occurring. So the divergences, you could very easily tell that all of the downsides were very heavily inflicting onto Intel. But the upside was not nearly as powerful, because let's pick this point right here, 820, I'm sorry. And then same time, 820. While we did recover some, we recovered almost 1% at this point. And we actually did not recover as the same amount on SPY. So then if that is the case, then why is SPY above from where it started? And that would actually have to do entirely with the divergence. So while Intel did make the attempt to kind of recover what it had lost, it had also come down a lot more than SPY had. And that is why you closed today down. And it's a little bit, it gets a little bit confusing in that sense, but it's that divergence that really throws this position into kind of like a trust at that point. It's like, are you going to hold or are you not going to hold? And you can't really determine that with you. What you're seeing essentially is that the downside is a lot more heavily inflicting, and that tends not to work out well for a position. However, regardless of whether or not that's true, I think if Intel can hold above 65 period in the next few days, I think you do have a good position on your hands, because I see no reason there for this gap to be entirely filled. But if it does fill, I would recommend that you do start getting out. So you can time this as well. You can sell it if it hits 65 or starts breaking below 65. You could sell it. You could sell it before it gets to that point, and then rebuy into the position with the profits that you already have made, and start riding it in the upward direction. Because more so than anything for these earnings reports is you want to play a continuation on those plays. So if it continues in the direction that you had originally set, then you can actually make a lot more. Because while you did lose, so it was 2.9 now, and I think it's about 1 now. Let me make sure. 158 now. So you did lose about 50% of that position. So you had made a lot. You made over 500%, and now you're down about 50% from your highest point. And so keep that in mind as you go through this, that as these percentages kind of start to spike out your position, you could actually re-enter with more. So had you, for example, sold on Friday at the high, which you never do, let's say you sold at 250, okay? 250, you sold a position, you're done, you closed it, then you come back after this price gets a lot lower, so it's 158 now. Let's say you bought two, because you have like $300 at least. You bought two of them, and if it continues that uptrend, then you can take a lot more out of those percentages. You're sizing up your position, so that is something you want to consider. As far as so let me make my points a little bit clear. I do not necessarily think that AMD is going to affect how this stock moves. I think all of the moves in the after hours are probably going to be determined how SPY moves. So if SPY moves up very hard, then you might see the same thing from Intel. If you don't see that from Intel, at that point, I would consider leaving your trade and entering again at a better time, because that means that there is some sort of divergence, and that divergence is not working in your favor right now. So that is my general analysis for this position. I think what you could also do is, if you look at these, once you get in the money, they hit really hard. So if you can find yourself in a position, for example, the spread on this is about 80. So let's say you buy two of these for the same price that you've just made. So you made 160. So you buy two of these and you hold that spread. If it starts falling into this, and if it goes into that direction really well and in your favor, then if it starts hitting in the money, you can see that, because the difference between these ones is a little bit less than 200. So you take your position now, it goes from 80 to 200, but now you can buy two of them. So you got 160 to, why can't I do math? 300 and something. 180, 360. It's a little bit less than 350. So you'd be able to do that, and you would already have the profits that you made. And that is a much better position for you to take. And if it goes deeper into the money, you're definitely going to get 200 and then more than 200 as it goes on. So 250. The max of the spreads is obviously 250. So you can achieve that in time. And it's a lot easier to get that $250 spread in that time. So I would say consider that being what you might do with your play. If you have more money and more capital to bank on this position, then I would do that maybe. And sell one of the lower positions, and that might actually prove to be a lot better. You would negate your downside. You wouldn't lose as much because the max is only 80 now, and that is a good way for you to do that. So I'll repeat that. So you got 158. You're already in this position. You could go ahead and sell this position right here, and then if it starts to go up, you'll make money off the spread. Now the difference between these is 80, like I've said. So the max you can lose is 80. But if it continues to go up, you could make, whatever this spread is, and the spread is almost 200, and you could make an additional 160, give or take. So that is something that you should consider in this play. I don't really have too much else to say about it. I do think Intel looks good to me, but if something goes again, like this as a technical formation, kind of looks like a good trend to me because of just the supports that it's taking. But you have to understand that we're also at all-time highs, and we've never been this high. So, what you see is no support here. You don't really have any. It's just a mental support. So the mental support's at 65. If it doesn't take the mental support, then you're going to have to take support at 64. And so that is where you're going to start losing a lot of your position. So maybe the spread wouldn't be a terrible idea. But like I said, I'm not a financial advisor, so please do not trust me with entirely anything at all. Anything I say is for educational purposes only. And I think that's it. Thank you, Cameron, for tuning in today. It was awesome. I appreciate you. It actually felt really good to have someone on stream. And I'll see you guys next time. Peace.